welcome to Analyst Insights, your plug for everything investments, economics, and finance. I'm your host, Rufaro, and I'm joined by my colleague, Ranga.
Thanks, Rufaro. Thanks for having me, and good day, viewers.
So we're going to start off with some ZSE trade updates. National Foods reported a 24% increase in their volumes in an environment in which we've had lockdowns due to COVID and the economic outlook hasn't been great. What do you attribute this significant increase to?
All right, so not National Foods manufactures or produces basic commodities. So obviously, those ones are sort of immune from any COVID-related restrictions. If anything, people were actually eating more, less at home, and I'm sure you'd see that if you have got young kids. They were spending most of the time at home, so obviously there's a lot of eating that happens. And also the fact that generally there's been an uplift in terms of the economic performance or performance around certain sectors. I think the agriculture sector is one, and it tends to benefit more from the availability of throughput to the business. So if they don't have to import more and they're actually getting most of the throughput locally, it tends to actually push up their volumes. So I think it's actually a feature of 2021 where generally most firms have actually reported some growth, and you'd expect that maybe for a basic good manufacturer more on the staple side, there had to be some uplift as well, be it from the milling side, flour, and also on the maize side, and the other sort of dry groceries, whether it's beans and others that they produce. So it was largely expected, but also the numbers could be a bit misleading.
If coming off a low base?
Yes, coming off a low base, yeah, because 2020 was a much difficult year because the first lockdown actually brought with it reduced disposable incomes. So obviously, even that feature that I've spoken about people eating more while at home, it wasn't that prominent because people were caught unprepared, so they didn't have enough, and they actually had limited even food. So it's something, it's some positive on the part of National Foods, and it sort of dovetails with the general growth that you've seen in the agriculture sector.
Yeah, but do you think the market is getting it right with net foods? Because if you look at the valuation, over 600 million US dollars. If you use the power market rate, and even the market in general is trading at more than 8 billion. These are it's an all-time high for the ZSE. But we can say with high conviction that our economy is not bigger than it was during the GNU when it was when we were dollarized and the economy was quite strong. So why do you think the market is getting it wrong in general and with the net foods in particular?
Okay, so look, I wouldn't say the market is getting it wrong. It's the market is actually processing whatever information is coming through. I think it's probably forewarning us of a very difficult economic performance going forwards. When you look at the major macroeconomic factors like inflation being one of them, and also the future of our local currency. So basically, if you believe that stock markets are leading indicators, it's probably telling you that the monetary aspect of our economy are going to come under increasing pressure. And also there's a general worry and fear by economic agents that as inflationary pressures build up and the Zim dollar is losing value, you need to be found in a place where you are well hedged. I think one of the biggest tragedies of 2008 was the fact that most institutions were actually found holding big amounts of fixed income instruments. And when value was lost, they actually suffered tremendous losses. That's why there's this move towards getting into assets that are returning value. So yeah, I don't think the movements that you are seeing are in any way related to the positive performance that is expected on the market. It's more a safe haven more value preservation kind of take. And specifically on national foods, I actually think the price could or the valuation could be much higher than that had it not been for the fact that it's tightly held. So right now, if you go into the market looking for national foods shares, you are unlikely to get them. So it sort of affects price discovery because of that liquidity factor. But certainly, the market at 8.4 billion, it doesn't really make sense. Using a thumbs up figure of say 10 times price to earnings ratio, you are saying this the companies have to generate 840 million US dollars by way of earnings. Even if you reduce it to 20 times, that's about 400 million. I don't see even any one of the big companies being able to generate more than 50 million US dollars as your profits. So it's clear that the fundamentals are not justifying the valuation that are on the market right now.
Yeah, so I think you're onto something, because if you look at the official inflation figures, which just came out 6.4%, and if you compound it into the future, you get a figure like 110%, which the accountants will tell you is above the 100% threshold for you to have to report using the standard for hyperinflationary environments. So basically, if our month-on-month inflation persists at this level or above, we're going back into hyperinflation, which is a really bad indicator for the economic outlook. So we've seen recently the Reserve Bank has increased the official rate. It's gone up to 97, which is still a massive discount to what we're seeing on the power market. But it's a significant movement from the previous level of 88. And it's actually movement that we haven't seen, because for most of its life, the auction has been quite flat. It's actually been, it's almost as if it's a fixed exchange rate. So do you think the Reserve Bank has changed its mind in terms of what it believes the fair value is? And do you foresee over the next several weeks or months the gap between the official rate and the power market rate closing?
Yeah, look, obviously it's clear that the local currency is coming under pressure, and the central bank here has got the responsibility to try and restore some balance. And I understand from this week's auction, bids below 95 were actually rejected, and they actually allocated much less than what was applied for, which is probably the first in so many weeks where generally the allocations were people were getting as much as the amount that we're applying for. So yes, but again, the gap is huge. To try and claw back from 95, trying to get to 180, where the power market is right now, is such a big a gap to actually close. And I think it has to be done. Otherwise, the confidence on the local currency continues to one. And at some point, if this had not been nipped into the bud, we're going to get to a scenario where the local currency would face total rejection, like what we had in 2008. So they've got an incentive to make sure that at least they try and reduce that gap between those two. And also, I think the other thing that they may need to consider is, since Treasury is now collecting quite probably more than 50% of their revenue in US dollars, I think they need to start paying for some of those big ticket items, maybe projects in constructions in local in US dollar terms, so that you don't put pressure on the local currency. Because if you pay a guy, say 2 billion, 3 billion, obviously they'll have to find some home for that money because they can't use it to pay, say, offshore suppliers. But then if you start paying them partly in US dollars, you actually dealing with that problem, but also you are injecting US dollars into the economy. And I think the biggest lesson from this is we don't need to keep fiddling with something that is working. So we have an economy that actually has sort of allowed transaction in US dollars, where some of the big businesses were able to generate their own currency from their own sales. You don't have to upset that, because if you do, then it means you may have to resort to the auction as the only source of foreign currency, and it doesn't have adequate resources to go to meet that need.
Yeah, so I think it's a positive development in terms of the central bank changing its view and allowing some movement on the auction. It remains to be seen to what extent this is sustained. We have reports that Treasury has exceeded their revenue targets by about 35 billion. I don't know whether we can read much into that. These are $dollar figures. Receiving $1 billion today means something very different from receiving it 3 months ago, or 6 months ago, or 9 months ago. So, can we read much into these reports in this currency that is constantly losing value? And what do you make of Treasury's revenue performance?
So that number is also benefiting from the depreciation of the local currency. So like I've said, I would think maybe as much as 50% of their collections are US dollars. And they are translating the US dollar number at whatever the auction rate, which is certainly different from the numbers that we're using for their planning purposes. So in fact, the surplus could be much higher were they to use the market rate, the para market rate. It could actually jump by almost 100%. If you are using 180 or whatever was the rate when they did their numbers. I think we have to accept that we have a sort of a dual economy that's Zim dollar based and US dollar based. And in fact, on a day-to-day basis, the Zim dollar component is becoming small and small, whereas the US dollar component is becoming bigger. And it is also reflected in terms of those numbers that you've just shared. And I expect it to continue increasing, especially now that they are allowing further devaluation, further depreciation of the local currency. It means the US dollar component of the revenue collected by government will constitute a bigger proportion of total revenue.
Okay. Switching gears a little bit, I think on the ZSE we've got a new listing coming up, Tanganda. I think it's the first time we've seen additions to the local bourse. I think over the last 18 months, really what we've seen have been exits. So are you excited by Tanganda coming back to the market, and do you think it's a strong buy at these levels?
Yeah, certainly. I mean, Tanganda was a very interesting investment proposition before it was demerged after that transaction with Mikos. And I think the only comparable stock that you can put next to Tanganda on the market right now is Ariston. And I think there's been a lot of interest, especially in the last 12, 18 months on Ariston, purely because it's an exporting business. And I think anything that was exporting was actually viewed favorable in the market. And I believe that Tanganda is actually a notch higher than Ariston. I think back in the day, even in terms of the market valuations, Tanganda it always commanded probably 1.2 times better valuation than Ariston. And I think last time we also even visited the States, you could actually see the visuals just tells you that maybe Tanganda is actually a much better prospect. So I don't think Mikos was getting that value of Tanganda and Mikos was getting much attention from the investors. And I think this transaction is going to unlock some value for the market. And it's good to have an additional stock on our market. I'm surprised. I thought maybe they would put it on VFX, given that probably more than 60-70% of its revenue is foreign currency, and they're trying to populate the VFX as well. So it would have made a good prospect even for VFX as well, for the Victoria Falls Exchange.
Yeah, I think they chose the ZSE instead because they got feedback from their shareholders who value liquidity over hard currency, over the benefits of listing on VFX, which is basically higher retentions for your incremental exports. But from a shareholder perspective, in terms of your actual ability to get in and out of the stock, VFX has proved to be quite poor. If you look at Tanganda, the volumes are very thin, and just trading it requires your institutional investor to open a Nostro US dollar account, and I think there's a bit more red tape involved in actually being able to trade on the VFX. So I think they made the right call. The ZSE is much more vibrant than the VFX, and I think there will be much more volume and liquidity in the stock on that particular exchange. That's all we have time for today. Thank you so much for tuning in. Please like us on Facebook and follow us on Twitter. And as always, we are interested in your suggestions, comments, and ideas. Thank you.